Imagine a big puzzle where each piece is a country's economy. When one piece changes shape, the whole puzzle has to adjust. Now, think about what happens if that piece is China, one of the biggest and most important pieces of all. China's economy is getting stronger again, and that's big news. But this isn't just something for experts to talk about. And what if I told you that China's economic rebound could be the hidden force shaping your future? China's economic slowdown has been a topic of discussion among economists, policymakers, and business leaders alike. A few years ago, the country was experiencing robust growth, but the momentum has waned. Official growth figures for the July to September quarter of 2022 indicated that the world's second largest economy was slowing down. The annual growth rate of 5.5% seemed increasingly out of reach. This slowdown wasn't just a blip, it was a trend that some economists predicted would continue, with no growth expected for the year. The reasons for this downturn are diverse. One significant factor has been China's zero-COVID strategy. The move had a considerable impact on economic activities across various industries. Cities that are manufacturing hubs like Shenzhen and Tianjin have been particularly affected. The strategy also led to reduced consumer spending in sectors like food, beverages, retail, and tourism. Trade tensions with major economies, particularly the United States, have also played a role in hampering growth. The yuan's declining value against the US dollar has created additional challenges, making it difficult for the central bank to pump money into the economy. The property sector in China has been another area of concern. After 3 years of strict zero-COVID lockdowns, analysts expected a quick recovery in this sector. However, the data suggested otherwise. A fall in aggregate demand plus deflationary pressure on the economy and the property sector, once a pillar of stability, became a source of stress. The local authorities are also reducing expenses due to financial issues, which further slows down the growth. Beijing did attempt to intervene by announcing a 1 trillion yuan plan to boost small businesses, infrastructure, and real estate in August 2022. However, the measures were considered insufficient to meet growth targets and create jobs. Yet, as we explore China's complex economy, two important questions pop up. What's driving China's impressive economic recovery, and how is this comeback going to change the world economy? Let's start with the current situation. Despite the apparent challenges it faced, China's economy has shown signs of recovery in recent months. The latest data from August 2023 indicates a promising trend towards stabilizing growth, and according to China's National Bureau of Statistics, key economic indicators across manufacturing, services, consumption, investment, and international trade have shown higher growth rates compared to those recorded for July 2023. While in the wake of economic challenges, China's rebound has been nothing short of remarkable. It's also essential to delve into the various elements that have contributed to this turnaround. The government's proactive approach has been a cornerstone in this recovery. For instance, the issuance of more special local bonds to finance infrastructure projects has been a lifeline for the construction sector, which has been grappling with difficulties stemming from an ongoing real estate downturn. This move not only provided the necessary capital for stalled projects, but also created jobs, thereby stimulating the economy from the grassroots level. Another significant contributor to China's economic rebound has been the robust growth in industrial output and retail sales. Surpassing expectations, these sectors have instilled renewed confidence in the Chinese economy's ability to achieve its annual growth target. The industrial sector's performance is particularly noteworthy because it has a ripple effect on other sectors. When factories produce more, they also employ more people, who in turn have more money to spend, boosting the retail sector. Consumer behavior has also played a pivotal role. With the easing of pandemic restrictions, there has been increased spending on travel and accommodations, especially during the peak summer holiday season. This surge in consumer activity had a twofold impact. First, it has directly contributed to economic growth through increased spending. Second, it had a psychological effect. When people see economic activity, they are more likely to spend, creating a positive feedback loop that further boosts the economy. The service sector has also seen a significant rebound, contributing to the overall economic recovery. For example, the index of services production grew by 6.8% in August 2023, faster than the growth recorded in July. This growth isn't just limited to one or two sectors, it's widespread. Sectors like hospitality and catering grew by 16.1%, while information transmission, software, and IT were up by 11.5%. These numbers are not just statistics. They represent real people getting jobs, businesses making profits, and the economy moving in the right direction. Retail sales of consumer goods have also surpassed forecasts, marking the sharpest rise in the sector since May 2023. This growth was aided by the summer travel season, which not only boosted the tourism industry, but also had a positive impact on retail sales. For instance, catering revenue reached a significant high as well as retail sales of goods. This indicates that consumer confidence is returning and people are willing to spend, which is a crucial factor for economic growth. But the real question is, how might these implications reshape the global economic landscape? China's economic rebound has a ripple effect on global financial markets. When China's economy is doing well, it boosts investor confidence not just in China but also in other markets. For example, China's industrial output and retail sales showed robust growth in August 2023, instilling renewed confidence in the economy's ability to achieve its annual growth target. This kind of positive economic data often leads to a surge in stock markets and strengthens currency values worldwide. It's like a vote of confidence that resonates globally. Furthermore, China is a major trading partner for many countries, including the US and the European Union. When China's economy is strong, it imports more, which can help improve trade balances for its trading partners. However, it's not that simple. China's strong economy also means that it produces more goods for export. So the actual impact on trade balances can vary from one country to another. But one thing is clear: when China's economy is doing well, it becomes a hot topic in trade discussions worldwide. Then there are the global commodity prices, which have been affected deeply. Everything from metals to energy resources has seen a shift, although the country's resurgence has been particularly noticeable in the pricing of steel, cobalt, and silicone. For instance, despite an abundance of silicone supply, China's economic recovery has lent support to silicone prices. This is significant because silicone is a key component in various industries, including electronics and renewable energy. Another area is the steel industry. China's recent economic resurgence had a notable impact on the global steel industry. The country's economic recovery provided a short-term support for steel plate prices, particularly in the development of wind turbines. Steel plate accounts for about 90% of the materials required for offshore wind turbines, making it a significant cost driver for such projects. This has implications for the installation costs of offshore wind projects, which make up approximately 40% of the total cost. However, experts predict that Chinese steel prices will continue to decline into 2024 due to slowing demand and overcapacity. But it's not just steel and silicone. China's economic rebound has also influenced the oil market. As the world's top crude oil importer, China's economic health is a significant driver for oil prices. According to the International Energy Agency, or IEA, global oil demand hit a record high in June and could be back on track for another record in August. The cuts from OPEC and Saudi Arabia, coupled with expected continued strength in demand, are set to result in inventory draws for the rest of the year, supporting oil prices. This shows that the oil market is indeed sensitive to China's economic data. For instance, weaker than expected Chinese economic data have stopped price rallies in their tracks. Just in a week, oil prices dipped on 3 consecutive days after China reported another set of weak economic data. Concerns about the property and credit markets in China's economy also weighed on market sentiment. However, it's essential to note that China's influence on global commodity prices isn't unilateral. Other countries like India and Mexico have started to fill the gaps in the global economy that were previously left open by China's economic slump. For example, Mexico has recently picked up commodity production, offering an alternative to Chinese-sourced metals like steel. Thus, while the immediate implications of China's economic rebound can be observed in the said sectors, the long-term effects are more intricate. The global economy is a complex web of interdependencies, and China's economic activities can either create opportunities or challenges for other countries. For instance, if China's economic recovery proves to be short-lived due to issues like debt problems or housing collapses, it could lead to a lack of stimulus in the global market. On the other hand, a sustained recovery could bolster global confidence and drive growth in various sectors. But what if the road ahead isn't as smooth as it seems? Let's delve into the looming challenges and uncertainties that could redefine China's economic landscape. One of the most pressing concerns right now is the real estate sector. Despite the government's proactive approach to issuing more special local bonds to finance infrastructure projects, the construction sector continues to grapple with difficulties stemming from the ongoing real estate downturn. The property market has been a significant driver of China's economic growth, and its current instability raises concerns not just for domestic investors but also for the global economy. The government's property tightening measures in 2020-2021 were a key trigger in the ongoing property downturn, which was also aggravated by the pandemic and related policies. Another concern is the deceleration in exports, traditionally a major catalyst for China's economic growth. The country has experienced a contraction in exports due to diminishing global demand for Chinese goods. This decline in exports is particularly concerning given the global interconnectedness of trade and how a slowdown in one major economy can have ripple effects across the world. The issue of domestic structural problems also looms large. While China's senior leadership has recognized the difficulties facing the economy and vowed to roll out more supportive policies, the country still faces challenges related to fiscal spending and growth. Local governments have tightened fiscal spending, which has constrained growth and led to a slowdown in the industrial sector. Moreover, the country's zero-COVID policy had its own set of implications. While it initially seemed like a robust strategy, the strict lockdowns have put deflationary pressure on the world's second-largest economy. The policy has led to a fall in aggregate demand, affecting retail sales, industrial output, and investment. Although there's a consensus expectation that China's economy will recover this year, the recovery has been slower than expected, particularly in the property and export sectors. Tighter regulations on internet platforms, fintech companies, and the after-school tutoring sector have prompted sharp corrections in these sectors. While the government has signaled a normalization of regulations and vowed to support the private sector and internet companies, business confidence may take time to recover. So, the next time you hear that China's economy is on the upswing, don't just nod and move on. Pay attention. Because when the dragon roars, the world doesn't just listen, it transforms. That's it for today. Hope you got value while watching the video, and if you're interested in more videos about economics, make sure to check out the video linked on the screen next. Thanks for watching, and I'll see you in the next video.